People are starting to talk about the Fed doing a switch in their policy. In this video, I'm going to talk to you guys about why. We're going to take a look at some charts and some very interesting things that are happening that could give us a nice time when we might turn around.
Decentralized.
Welcome to Everything Currency. I'm your host Jay, and today we're going to take a look at a bunch of these charts. We're going to take a look at the whole overall market. We're going to talk about what's going on with the Fed overall, how some critics of the Fed are starting to say they're moving a little bit too tight based on some data that they didn't really expect. And I think this is kind of exactly what's happening. So if you're excited about learning what I'm talking about, like the video, subscribe to the channel, share it to some share it to some people who need some similar information to this, because you won't find this information like this on other channels. And rejoice, we may be closer to Fed capitulation. What are they talking about? So basically they're saying is it suggests that the Fed Reserve may be closer to a blissful policy pivot than markets think. So basically they're thinking that the Fed is going to turn things around, and right now the Fed is doing their quantitative tightening, and in crypto terms they're burning tokens. So they're burning about 95 billion a month in quantitative tightening. They're lowering that balance sheet, and that's pretty crazy. So that's actually that's crazy. So it says monetarists have been warning for months that the Fed model misunderstands the potency of QT. So they're saying that they're doing this too quick. The effects of this haven't even picked up yet for them to keep raising those interest rates. So what I want to talk about right now is the fact that they actually are misjudging things by a landslide based on some of the things that are going on. Now, personally, I believe that they have to burn a lot of these tokens because they printed a lot of money for COVID. So of course they got to get that money out of there, or else inflation is going to be super bad. So basically now they are raising these interest rates all fast, and it's causing tightening against like the pound, other currencies that are going against the dollar. As a matter of fact, if we look at the DXY, like it's been on this parabolic curve rise. It broke like this trend that it was in since 2016, and this is just hard for other countries. Like look at the euro right here as compared to the dollar. So it's like people are in Europe are having some issues as well with energy and the price of things, because things are like energy are priced in the dollar, and the dollar is getting more expensive for them to buy right now. That's a very light way of putting it. But going back to the article, one of the important things that I want to talk about is this right here. They basically are saying that the relationship between inflation and job altering is a jolt in the U.S. The number of vacancies of unfulfilled jobs reached a staggering 12 million earlier this year. So remember, at the early beginning of this year, people were still getting their COVID checks. People were coming off of COVID. People were saying, you know what, I don't even like my old job anymore. They want me to work from home. I'm gonna look for something else. And this was a period of time where there was 12 million people out of work. Well, that number dropped drastically, down to 2 million, like a couple months later. So I mean, since March, it dropped to 2 million since March, until now. So it's like in 7 months, we've seen 10 million people get jobs. And of course, that's good for the economy, and that's good for the Fed. That's one of the things that they're supposed to do, is to make sure that people or to make sure that businesses have money to invest in things like labor and to keep people at work. And, they do it in their policy in these roundabout ways. But now they're saying that the effects of COVID are fading fast. Well, I beg to differ a little bit, because they printed so much money and we're still seeing a little bit of inflation and stuff. But that's just a different story for a different day, because printing all that money, there's other things that need to happen in order for inflation to actually happen. I feel like, the price of energy is going up, and when the price of energy goes up, we see the price of everything go up. So that's kind of throwing people off, and this is just my theory. It's throwing off a lot of people. The Fed wants to lower inflation, and they want to lower these prices, but we're in an energy crisis right now. We're not buying the cheap oil anymore, so everything's getting more expensive, and that's kind of part of it. But seeing that all these jobs came back into the market, so fast, like the Fed you would think the Fed would be getting a little bit more dovish on their policy, and that's basically what this article is saying. They're basically saying that the Fed is overusing QT. They're burning so much money. They're trying to make this thing happen, but they might be causing something very bad. So the Fed actually wants to have a little recession to kind of calm things down, and they might be causing something major that we can't recover from. And I'll put this article in the description for people who are really interested in stuff like this, and I suggest you read the entire thing so that my paraphrasing actually makes a little bit more sense to you. So pretty interesting things happening with the Fed right there. But looking at this is very interesting right here. This is the TLT. This is the 20-year Treasury bonds ETF, and we can see that this thing broke below its 500-week moving average back in March. And it's been going down ever since. Now, the next support that we see is right here at 87, and when this thing bounces on this support right here, I feel like that's when the bear market is going to be done. So let me show you something else about that. Okay, if we look right here at the SPX, so we see that the 13 to 34 cross on the weekly in March. Very, very similar timing. And then if we look at it right here, we broke below, we bounced on the 200 moving average, tried to get a nice bounce there, getting rejected by it, and we're dipping below the 200 moving average. So I got this green line right here, which is where I think we're going to bounce at for the SPX, which is the 200 week moving average. That's where we bounced at when we had our little ugly COVID dip. So if markets continue down, which, not gonna lie to you, this coming below the 200 moving average right here definitely looks that way, then hopefully we get this bounce right here, and then this would be the bottom of this bear market for the SPX, which would also be good for, of course, Bitcoin. And this is what we're seeing on the Bitcoin chart right here. So let's bring up those same moving averages, and we'll turn this to the weekly. Zoom in right here, and got to put in the 500 week moving average for Bitcoin, and we'll see. I got this red line right here. Right now, that 500 week moving average is around that price of 14K. So yeah, I'm gonna go ahead and try to predict something for the first time. 14K will be the bottom for Bitcoin, and it might be we're heading there. And yeah, I'm just basing it on a lot of the monetary information that I'm seeing. I'm looking at bonds, I'm looking at stable coins, I'm looking at the DXY, looking at the DJI, looking at what the Fed is saying, what economists are saying, and it kind of looks like it all lines up for a bounce on the 500 week moving average for Bitcoin. This is going to be the first time, because it barely had 500 weeks in March of this year. But when we look at the SPX, which has been around for a lot longer, of course, we can see we bounced there, and that's the next support level that we see. There are some other support levels, but those might be just little bounces. I think we're just going to have to come down and get some more downside before we see some upside for, and these are long term. This is long term right here. The bear market could last another year, maybe another week. We don't really know. It could last some time, but that's my speculation right there. Bonds, when the bonds bottom out at 87 and the XPX bottoms out at around 29.35, then this little thing right here may hold up true, because if I'm gonna put this article in the description, it talks about how of course, even if they start switching right now, we haven't felt the effects of what they already done, so things could get in a quick recessionary phase and then bounce up from there. So that's what it looks like. It looks like we're headed straight down, right here on this weekly. Let's just go ahead and tap this level. There's nothing stopping this thing right now, no type of resistance below it except for this level right here. Bitcoin looks exactly the same way, so does the SPX, and the DXY looks like there's nothing stopping it above before this 120 mark right here. So let me know what you guys think about this information. Do you guys think that I might be onto something here? Do you guys think that bonds are the market that knows all? Because that's what they call it. Traditional traders call bonds the market that knows all. So like the video, subscribe to the channel if you're not subscribed to the channel. Again, check out the courses in my description, check out the Telegram group, check out everything I created for you guys. Also check out Ohana DAO and the Hula Girl NFTs. Got some dope things going on over there. And yeah, leave me a comment in the comment box. RIP to crypto roots. Think positive, and positive things will happen. Till next time, peace.